Yo. Wow. Voice crack of doom. How's everyone doing today? Hope you guys are doing well. Ooh, let me close this off. All right, so sent out the daily bias as usual into the daily bias chat. Look over on the higher time frame, then you're supposed to see that. We'll review that trade later. But on a higher time frame chart, we've got, let's go to the daily chart here. Can't really see it. On the higher time frame chart on the daily, obviously we've got this imbalance here that we can be using. There's also a VI here in price action, and we'll kind of explain how both those are going to be used. But either way, order flow on the daily and the 4 hour is bullish. We were looking for longs yesterday. I explained my long setup on 9:30 going into the buy side, and then eventually we came back down into the range and had a swing to Z profile. That video is uploaded and posted into the models and reviews section of the private group if you want to go back and watch that. So displacement away, dropping back into this. There's not really an inefficiency here on the 4 hour. On the 1 hour, on the 15, there is a little bit of some information there. We've got this larger inefficiency, which is going to be slightly higher resistance as we have to get through this. Just the amount of speed, although it's about price range, I'm expecting some slowness in here, at least in the upper portion, as this is going to be a wick on a higher time frame. So you kind of split that in half, and as long as it's closing above 50%, they're going to be targeting that high. So not too much of concern, but just something to be mindful of. So I'm looking for higher prices as it tags. Obviously, the previous day high is the short-term target. The ERL 15-minute chart, you'll see this ERL here as a target, right? And then you also see this previous week high is also a target. So as we drop into the range, let's look at the 1 hour chart. We've got this daily range between this intermediate term low and this short-term high. Drop back into discount right there perfectly, and then start to expand up. We have a shift above a SSD with displacement. So we're looking for this to be the preferred low of the day, especially if there's SMT there, which you can look for on a 1 hour chart here. Between, you can slightly see it here. The 15-minute chart, let's see if I can pull it up. Here and here, not the best, but it still works. And then you also may have it on, yeah, this low right here. You don't, not really. 1 hour maybe is PD or ASMT, but either way that counts, so you don't need to find anything else. So we have 10 a.m. news as well today. I think it's like jolts, whatever. There's no restrictions for that one. So if there's a model beforehand, there's a model. If you want to wait for after 10 a.m. news to drop and then find a silver bullet after that, that's perfectly fine as well. I'm looking at this minor sell side to potentially be swept, going into kind of the low of the session. I'm not going to be taking any demo trades during the session today. I'm already in one from earlier, so I'll showcase that later as we get further into the session. Were you expecting another swing to Z day? I'm not. Preferably, I don't want to see a swing to Z day. I want to see a classical net protraction. So I do want to see AM session move into 10:30 and form the high post 10:30, preferably post noon. So no, I'm not expecting a swing to Z day. Tomorrow, do we have? Let's look at the economic calendar. Yeah, tomorrow we've got 8:15 news and 10 a.m. news, so both of which are not high impact in terms of an 8:30 news driver is like high impact. Same thing with FOMC, things like that. So 8:15, 10 a.m. is not going to be super high impact. Yeah, exactly. Possible 10 a.m. or a 9:30 Judas into a 10 a.m. expansion. Either one would work. So yeah, we got this short-term sell side here. Just kind of minor sell side on the 15-minute chart. You'll see it as well. So a short-term low. There's also some inefficiencies down here that we could be using. I'd favor if it actually stays above this. If it stays above this sell side, then it would come all the way back up and actually be a little bit stronger. But I'm expecting NASDAQ to sweep that at a minimum and then potentially start to move back up towards the range. And I'm not marrying this bias. Obviously, we're just going to read the order flow as it's given. So obviously, we came up and swept the previous day high out, or we're dropping back down. We got the 5-minute over here. 5-minute order flow is not insanely bearish yet. If we start displacing through this swing low, then I'd start to consider it. But right now, it looks perfectly fine. We just have this consolidation, sweep the swing low back inside IFVG now. So we're just being patient and waiting. My suggestion today would just be studying the macro and then post-news macro. So you don't look at anything, the normal 10 a.m. protocol is you wait for the first 30 minutes. It's kind of for the ATM model, criteria. And for anyone who's struggling or trying to find a model, this is the criteria you normally want to use, is you just wait for the macro time, or preferably after the news drops, and then try and find a setup either between 10 o'clock and 10:10, or potentially extending that window all the way until 11 o'clock and just looking for a standard silver bullet model. All right. Mm-hmm. Tomorrow expected to be decent. I mean, we got another 10 a.m. news. If we get a good move today, then no. Tomorrow shouldn't be. I mean, well, I'm not going to say no. I mean, it's going to be bad PA. I don't really have any expectations for tomorrow. Just normally for NFP week, as I said in the stream trade, the daily buys from Sunday, Monday to Tuesday normally has a good move. And the reason for that being not a good move, but a large move, meaning they build sentiment in for NFP. Everyone, they know NFP's being watched. They know it's a high impact news driver that everyone kind of respects as a tier 1 news release. So there's going to be a lot of movement in the beginning of the week to build sentiment going into that, right? If you think about retail traders, they see that movement on Monday, Tuesday. Oh, this is going to be a good week. This is going to be the movement of the that we're looking for. Let's now follow the trend, and then NFP comes in and sweeps them up. So I was saying to watch this minor sell side in favor if it didn't take out that swing low. I'm going to put this into predictions chat. Was favoring this swing to be swept. So if it, like I said, if it doesn't sweep this, then you expect this to basically be... Now, why wouldn't it sweep this? This is the SMT. So if you look on a different time frame chart, 1-minute chart, if we have SMT, like here, swing low. See the swing lows in here being purged, and then the swing lows from over here not being purged. This is the SMT. PDF guys are turning. Gears are turning. So now you've got displacement through a short-term swing high. You can see this as it's a 1 minute, so it's a 1 minute market structure shift. But if now we've got this IFVG being printed, not even an IFVG, it's kind of more of a balanced price range. So we are extremely bullish coming into the session, which is great. You can see this as the expected potentially session low. I'll put a question mark there for now. But that could be the expected session low going into the day. Let's zoom out a little bit more here. $846. 846. So, okay, so it's not SMT on this one. It's just on the later one. It should have came down and took this low though. That's my only problem. Unless yeah, it's kind of funky. One of them should have taken it. I don't know why one of them didn't. I was watching an interview. It was the record holder for biggest top step payout. Forgot his name, but he was saying that he believes Jamie stop will break even as soon as is possible. Oh yeah, I've been trying it for that for last couple of days and think it's working well. But long term, do you think that's a good strategy? Um, I I don't think it's a good strategy in the beginning. I think he's only able to do that because he understands his model very well. I'm able to do that on some of my trades, but not all of them, right? If you suffocate the trade and if it happens to go back red for 1 second and then come back green, you're going to get stopped out before, right? Especially if you have like a trade limit model that you're enforcing as your rules, where let's say you only have 1 or 2 trades you can trade per day. I'd rather give the trade a little bit room to breathe, and then as it's moving away, I can trim it to break even, or if I'm taking a partial. But I don't think as soon as you get in a trade and as soon as you see green, you put it to break even, unless you've developed a very refined model. Someone who understands their model and their entries extremely well will be able to do that just based off of intuition and feel. You kind of know what trades are going to be losers, what trades are going to be winners, just based on how they're printing as soon as you get in. I feel like most people can kind of articulate that in some way. So when you get really, really familiar with that in terms of your body feel and kind of what's being told to you in the marketplace, without some sort of bias, then you have this first presentation. This would be first. Not really, but I like this one better. That's first presentation. Either one works, to be honest. Yeah, of course I made more break evens, but no big losses. Right. So I'm not gonna instantly trim it to break even, but I think for some it may work, some it wouldn't. I don't care what's first presentation or not. This is very all I get. Screenshot this really quickly. So also be careful of, since we do have the news, this could just be a higher time frame kind of consolidation range. But like I said, if this can be low session, we don't have SMT on a higher time frame, which I'm kind of looking at, right? If this is supposed to be low session, there should be 15-minute SMT there, which we're not seeing across the averages, either between here and the 930. Yeah, so I don't see it there, which isn't a huge problem. It's not 100% required for this retracement leg to have 15-minute SMT specifically. I mean, it's still there technically if you look at kind of these lows here, these lows here, and then these lows here. So it's still there. It's just not on like a actual swing point or inefficiency, except there's a VI there, but it's not on the other ones. So yeah, I'm just kind of talking to myself. What even is the news driver today? Is it Jolts? Yeah. Um. Yeah, we'll go over the other the trade I'm in right now on demo later, but it's very similar to kind of a one shot one kill, not a one shot one kill, but yeah, actually it is a one shot one kill. It's an entry at least towards the weekly range of what I'm thinking it's going to go to, but it's capturing the daily range instead of the session. This is kind of the first one it's given me in the past couple of say like 2 weeks where I felt confident enough to do it. Kind of like just leave it limit orders overnight, let them fill, and just let it go. So yeah, to me, it looks extremely bullish. It's taking out this high. I expect this to be the low of the session at this point. I've got an inefficiency here being printed on. I'd actually be perfectly fine if we left this open as a breakaway gap. This is down here is being used as a breakaway. So if it comes, it can also come down and fill up to the order block. Whoops. Yeah. So now this is the entire fair value gap range there. So let's see how, just even how this candle is printing. Obviously, if it's coming back down, touching here, and shooting back up, just by the candles are printing itself, you can kind of get some insight. Look at the 5 minute. I told you the 5 minute was still bullish, unless we displace through that low. So we don't need to see a CSD or anything like that. 5 minute order flow is already bullish. The rule for the 5 minute is if you're trying to take a 1 minute trade, you need to preferably have either the 5 minute CSD, IFEG, or shift, or order flow has to already be in your favor. So coming into 9:30, order flow is already bullish. That's why you can look to trade going to 9:30 into something like even here, 9:44 pre-macro. That would also be perfectly fine. You got a shift above the short-term high and efficiency dropping into that. Perfectly fine to use that. I think this may be a Reaper IFEG. I don't really know. I don't want to confuse too many people, but for those who know what that is, I think it's this one. You can correct me if I'm wrong. I don't use it at all in my analysis, so I'm not too familiar with it. But we're watching how now this inefficiency is being traded into. We've got the macro time here in 1 minute. And you have a nice low, high, lower low, upmost candle. You've got inefficiency now being traded into with the order block. This wick is actually an order block as well. It's a premium wick. But you have this here, which is our standard OB. Either way, inefficiency during macro time is probably something nice there, right? Screenshot this. It doesn't need to drop back into this order block because we technically this kind of weak breaker does not close above it, though it took out the high. And this also is a premium wick. So if it comes back down and fails to touch the order block, it's extremely bullish. In this case, it's coming back down into mean threshold. So like I said on the beginning of the stream, for most, if you're following the ATM criteria rules, or if you don't really know too much about your model in terms of how it affects, how news drivers affect it, my best suggestion is just obviously to study first. Number two is just to wait for either use a 950 macro, or you want to wait for the news to print. So post 10 a.m. to 10:10, or you can even extend this from 10 to 11, and look for a silver bullet entry. So you kind of have these two that you're mostly focusing on. This one's a little bit more advanced, obviously getting in before the news occasionally. Watch how see how it's dropping below mean threshold here. So it's already, this is our first kind of signature of weakness. It doesn't even need to close below it for it to be weak. The fact that we're even touching below mean threshold is already the first signature. Now the closure will tell us more. So if it's closing still within the gap or closing above mean threshold, that's good. But this is our kind of first indication of weakness. So the normal kind of rule that ICT has said is 3 PD arrays. Once 3 PD arrays are violated, your ass is next. It's like the famous quote you see sometimes linger on Twitter. I don't use that rule specifically for stop loss, nor do I use it for my intraday tape reading. If you understand how the candles are printing, like for this example, it is going to be useful. So if you're just marking out PD array, PD array, PD array, if it's displacing through all of them, then yeah. But this here is not violating 2 PD arrays, right? So the fact that it's closing, not closing, but wicking below mean threshold, like I said, that's the first indication of weakness. Second indication of weakness would be even it closing through that. So now I'm not saying it's going to go be bearish, but it's going to be dropping further into the range, either inside of this breakaway gap, potentially swooping that low. But now you can see the candle bodies are respecting the gap as well as the inefficiency, as well as the mean threshold of the OB. So right now this is kind of like, I guess, if you were to, instead of a -1, it's probably like a 0.5 for the bias. Negative 0.5 points for bias. Eventually, when those numbers stack up, then you either look to flip or sit out. So I'm constantly weighing both sides. I'm constantly taking in the data as it's being given to me. If you choose to filter the data and just marry the bias and just look for longs and just look for shorts, any data that's counter bias or opposed to what you believe is going to unfold in the market, you'll irrationally throw that data out. And we don't want that. So we want an ability to look at things with a clear perspective of what's actually going on. And so I'm constantly, as 1 minute PD rates are going on, I'm reading the order flow. I've been doing this I've been reading the 1 minute at least for the past 4 years. Let's say 3.5 years. So it's something that I'm comfortable with at this point. I was comfortable with it about a year, let's say like 2 years in maybe. This is not something that everyone needs to be doing. I think if you just study the 3 minute, the 5 minute, that's really all you need. The 1 minute is extra. The 15-second is beyond extra. It's for the perfectionists and freaks of the market. If your goal is not to be a perfectionist, then obviously you can't reach perfection in trading. So if your goal is just to make money, get in, get out, you want ease, you want the simplest thing it can be, use the 3 minute and the 5 minute. The 1 minute is for the ultra precise. If someone like me, I need to be able to teach. So there's more data on the 1 minute chart, as well as it just sharpens my skills as I'm going to be able to see 1, 2, 3 order blocks inside of that range instead of just one. So just studying for me is just getting reps in over and over and over and over again. So if I get to see 14 fair value gaps fill on the 1 minute chart compared to 2 fair value gaps filled on the 5 minute chart, the 5 minute chart's obviously going to be more important in terms of the order flow and entries, to be honest. But in this way, I'm getting the most amount of reps for the most amount of PD rates, to the point where if I do drop down to the 15-second, it's all the same thing. In the beginning, 15-second chart's going to be something scary, right? But it's just all the same price action, and the same way as the candles are printing, it's all normal. So like in here, you've got a volume balance with an order block, so this becomes the OB range, and you don't really have any premium PD rate up here, so you should expect speed through this short-term high. So you got tiny inefficiency there also being traded into. So this is all during the macro time, all coming into 10 a.m. news. You can also look on a 15-minute chart. We're still trading within this hourly gap. 15-minute chart, you can kind of refine that down. It's still just a larger gap. So it might be slightly high resistance up into that buy side, but this news driver pumps us up. And then we can get through that range completely. You can see the order block there holding quite nicely. This should be an immediate rebalance. I'd like to see this candle either pop up green or the next one pop up green. So it should come and take this swing high here. There you go. And then now if it can close through this should be where we should have speed with closure. So look for, oh, you can't predict the market. You can't. So it's all the same price action on the 15-second, the 1 minute, the 5 minute, but I want the most amount of reps. If I'm wrong 1,000 times and right 1,000 times compared to someone else who's right 100 times or wrong 100 times in the same window of time, a year, who's going to be better? So that's how I got to the level I think that I'm at now. I've been absolutely blessed by God to be in this position and to be able to read order flow as well as I do. But it's also a lot of hard work behind it. So if you're just waking up at 9:27, getting a bias in 3 minutes, watching it till 10:10, losing a trade, and then never looking at it the rest of the day, you're not going to learn. That's just the most blatantly nicest way I can say it. If you really want to get good at this and learn, you have to be doing work. You've got to be obsessed in some way. And 90% of traders don't make it. right? Are you part of that 90%? Are you part of the 10%? If you want to be part of the 10%, you got to do what the 10% does. Simple as that. You got to be committed. You got to accept, okay, this is my responsibility, but you actively choose the life that you want. So if things aren't going your way, if you're not disciplined, if you're doing this and that, you're actively choosing that in some sense. I'm not saying that all life conditions are actively chosen, but in some things, right? If like social media or for whatever the things you don't want to be doing, if you don't want to be doing it and then you're self-sabotaging and actively choosing the other one, that is in some sense your fault, right? Not to be mean, but that's just the hard reality sometimes. So if you want to get really good, you got to be obsessed. So here we're approaching 10 a.m. news here in about a minute. So far, the order flow has been supporting. We've got this inefficiency being held with the order block, trades up into it. See the immediate rebalance there, the nice speed up past the short-term high. So at this point, I don't really want to see it come all the way back down and fill the breakaway gap with the amount of volatility that's coming in. So I'd favor if now this is the manipulation at 9:30. This is going to be the expansion at 10 a.m. Screenshot this one last time before it pops up here firmly. Yeah. You've got last manipulation legs in here, just a 1 minute tiny one. -2, -2.5. So that's a little scary. It's lining up there. If you want to use this larger one, I'm just going to put us higher, but that bothers me a little bit. The fact that we're trading to the higher time frame gap and it's right there, but let's see. There's your 10 a.m. news being used as expansion. It needs to close bullish. If it comes and wicks this and comes back down, it's not expansion. It needs to be closing bullish and preferably closing near the top end of that candle. Right? If it wicks, it's sus. So take a deep breath. Nothing's wrong. I know sometimes with these news drivers, we tend to anticipate and our blood pressure and heart rate increase slowly, and then this is where sometimes you can make bad decisions. You see this thing and you become impulsive. Don't become impulsive. Just wait. This is completely normal. There's nothing wrong. You're not in danger. We're just reading it as we normally do. So here it's closing around 50%. It did close bullish, but it was not to the high end of where I wanted it to see it expand towards, which is perfectly fine. We're still expecting higher prices, and now 10:30. I think this is indeed, like we said, the low of the session. We're looking for, obviously, as you know, I've said it multiple times, for the session specifically, from the static window to static window, the session, here to here, here to here. What time is that going to be at? What time is that going to be at? So now we're expecting in some sense for a measuring gap to form. So we want to see either a breakaway gap here, basically another breakaway gap either forming there. This would also work, but I want to see a true like large gap in efficiency forming here somewhere. You got a breakaway gap. Normally, in terms of a market maker model, you have normally 3 breakaway gaps that are easy to spot. And it's after every single stage of delivery. So normally you have one at the bottom. So when price is reversing, it will speed down to that swing low, speed away from it. That's what a wick is on a higher time frame. So whenever you see a wick on a lower time frame, you know that that's going to be quick down, quick up. It's forming that wick. So whenever you see a reversal, for example, and it's that reversal signature of, let's say, sell side, and then it's sweeping below the sell side, and the candle bodies are closing above, like this. Or you have a swing low, and it's sweeping the sell side, but the candle bodies are closing above. Quick down, quick up, quick down, quick up, quick down, quick up. There's going to be, a lot of times, a BPR here, or even a breakaway gap forming at the bottom. So in terms of where the breakaway gaps are forming, you have normally one at the bottom. You normally have 1 to 2 in the middle. And then right as it's about to sweep that buy side right over here, you normally have another breakaway gap, a couple of them forming as it speeds up to that buy side, and then it's going to speed away from it, right? So speed right near the point of reversal and then right after it. This model, man, this model. Hold up, give me a sec. I'm responding to someone. So we've got one inefficiency here. I'm fine with that being left open to the left of it. Look how in this wire range, filling with buying, filling with selling, and it breaks away. So this to me is a speed, kind of a speed inefficiency. So more of a breakaway gap than a true inefficiency. So that I'm fine with it being partially left open or fully left open. Okay, so now I'll explain the trade setup. Yes, looks. I explain the trade setup. So as we know on the higher time frames, yes, this works. Okay. Sorry, let me change the color here. So as you know on the higher time frame here, the daily chart, I was looking for higher prices. So we have ERL up here, internal range in here, being traded into. We also have a volume imbalance right here. That is a discount PD rate in this case. As price is closing above, this becomes almost as an inversion gap. Okay. For today's opening. Oh, let me answer a question first. Can you explain why you expect the trend to end at 10:30 or 12? How do you pick between which one? Just order flow and higher time from TPs. Yeah, both. There's other ways. If you look at the PDF, there's other ways you can kind of gauge DOT. I had a whole chapter on that, but yeah, the way for most people, all you got to do is just read order flow. You put your targets there. As soon as it's tagging it, if it's the wrong time, you go to the next one. Obviously, you're going to have price as well, so I'm not just using time. I'm using a combination of both. I'll set limit orders. Sometimes I'll just use time. I'm really confident about it, but yeah, you can use standard deviations. You can use a bunch of stuff. So going into this setup, this becomes a discount PD array. I don't need to trade back into this one. This has already been filled and obviously respected. Now we have, look at this as an inversion of your value gap, okay? It's a volume imbalance, which is now traded through. This now becomes a discount PD rate. We've got buy set up here. We also have 50% of this premium wick, both of which are targets there and there, okay? I looked at that yesterday, reading into it. That becomes my bias, okay? I'm expecting for today's candle, it's going to drop down, tag this daily imbalance, move back up, tag the buy side. That's what I'm looking for. Open, low, high, close. So as we know, it's going to be open, low, high, close. I normally look for this range in here. There's also a trade towards the sell side in here. We also have high impact news today, so we're expecting a move. Okay, so as it's dropping, let's keep that discount array marked out. On the 1 hour chart now, let's look at it. We got this daily range between here to here. Okay, intermediate term low. On the lower time frame, you'll see it sweeping the sell side to the short term high. This is our dealing range from here to here. Okay, notice how this gap now is in discount of that dealing range. And on the 15-minute chart, we have a time-based swing low right above it. We've got a visual consolidation. We've got this swing low here. Notice as well on the 15-minute chart, we've got this gap here. We've got this swing low here. And then we've got this bullish order block here. It supports that gap. It's kind of a lot. Let me take this off first. So a discount PD in this higher time frame box. We've got this inefficiency here. We've got this swing low. And we've got this order block. So as it's opening up at midnight here, we're expecting for it to drop down, take that low, dig into discount, reverse, form the high. So as it's dropping back into the range and it's targeting the sell side, I can be going short from the open to the low, targeting this sell side, targeting this sell side, but more importantly, targeting the time-based liquidity. If it comes down and sweeps the time-based liquidity and doesn't tag discount, doesn't tag the higher time frame array, technically that's still fine, right? Especially if we have SMT or something there, that would still be perfectly fine. If it leaves that, for example, as kind of an untouched breakaway gap, it doesn't touch it and it leaves it. So what I can be doing is I can be shorting it as it's going down into the sell side, and then have both my take profit for the short and long limit orders set on the same level. So as it's going down, it's buying back the stops or buying back the shorts and then rebuying for longs towards the high of the day. Okay, so that's what I was looking for, and I did not have my limit order on this swing low, nor did I have it on this gap, just for the sole purpose of if it comes down, sweeps this time-based liquidity first, and then goes back to an inefficiency and premium, I want to be filled in there. So in hindsight, I could have left it down here and left it at this discounter right here. I had it here originally. I don't have it recorded or anything, so if you believe me or not, it's just up to you. But to be honest, I just wanted to get filled out here. If it ran down here, I'm fine with it. So then my stop in this case goes below, one tick below mean threshold of this supporting order block, right? This is an order block that supports this gap in discount. So if it was to drop into the range, it shouldn't drop any more than this order block, as we see with the ATM model, things like that. So I'll pull up the demo trade here. Shorting it as it's going down into the range, leaving my limit order on a couple, is a little slightly below the PM session low in there. Clear some of this out. Stop was at below main threshold of this order block, so right here. So I'm shorting it here. Shorting here as it's open low, so open to low, targeting the manipulation target, buying it back there. You can't really see the contract size. Let me turn the contract size. So -2, buying 8. How does that work? I'm rebuying my shorts, buying another 4 contracts automatically with a limit order. So I was sleeping at this point. I'm outbreak of 315. I just bought my limit orders, got in, and then targeting the previous day high up here. There's 2 on that fill. Another one at the ERL that I mentioned before, and another one at the previous week high all the way up here. So this is the kind of one shot, one kill that I was looking for, basically targeting, getting in near the low of the day, targeting the high of the day, kind of swinging the entire daily range, if you will. I haven't done one of these in some time. So it's good practice for me, as well as just kind of demonstrating the one shot, one kill and the stuff that you see go on all the time. Classic London protraction profile. I don't need to see London form the low to get in at New York. You don't need to see that either. When you see it enough times, eventually you'll know that London's going to make the low. It's not going to stall out and then, right? It's the same exact price action you always see. And in terms of also this higher time frame market maker buy model, this is just the kind of the low risk buy. I guess you could see this as one, but it's just dropping back into the range, retracing. Take this manipulation link if you wanted to. I don't think it lines up. Yeah, it's a little bit overshot. But time-based liquidity, using as a reversal point, obviously discount, and then trading back up to the range and seeking the external range and premium, external range. This is still slightly in discount, and then external range all the way up here. All right. And as that gets filled out later, or if I get stopped out, one of the two, I'll send the screenshots as we normally do into the stream trades section. So a little bit of a drop down here back into the reclaimed. Oh my gosh, look at this ES chart. Yeah, no, I might turn it off. It's pretty bad. Yeah, and at this point, this still is the draw up here. And this is still the draw up here, so you look for now this to be used as an inversion for value gap. That's why I say normally just want to wait for the news sometimes. Wait for the news, look for a silver bullet to get in. Why isn't it copying? we go. Just got stopped on this. Oh yeah, trim stop. I like that. Yeah, and like I said, we're still digging within this higher time frame PD array, which is a 15-minute sibi / 1 hour sibi. So it's gonna be high resistance as we're getting into it. Tiny inefficiency there. I want to see if it holds it. 5-minute, we still look fine. Just this little energetic rundown to take stops. It's not what you want to see. Put it relative equal lows there. I don't think it's the same take. Low, 57.5. Yeah, same take. So relative equal lows there. You can see it's being used as an IFEG. Yeah, I wasn't either. Oh, good. Give me 1 sec. I'm DMing someone as well. All right, so we're using the IFEG as we should. Take the screenshot of another member. How do I set my stop loss to show? Yeah, so you want to be doing, instead of setting limit orders, if you take the position, you actually just drag the position high, it'll put that stop take profit. If you drag the position to the bottom, for the long example, it give you that red green sort of thing. Otherwise, if you set limit orders, it won't show you that. But if you're using limit orders for partials and things like that, you still have to manually set those in. So we're still looking for our new high post 1030. Bing, bing, bing. Bing, 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 bing. This is so funny. What is this ES chart, man? Oops. Nope. There you go. So this should be like another protected low here. Not low of the session or anything, but it's also another protected. Let's just label it as an intermediate term low. Now you could be saying, Flux is a lot of stuff on your chart. Why do you have these many things? If you've done the kind of exercise of, after the day is finished, you go back in, you delete everything off your chart, you come back in and re-annotate everything. This is the process that I do, which is basically, as I'm doing that, as I'm screenshotting everything and marking out all the PD arrays from the higher time frame to the lower time frame, I figure out what's there all the time, right? If you get 90 days of data, eventually there's going to be some things that you're always marking out on one of the charts, on the 1 hour, and then on the 5 minute, there's always something there. On the 1 minute, there's always something there. So as you progress, you'll find that, okay, these PD arrays are here around these times, for example, around, and on the higher time frames, this is what I'm seeing. And on the lower time frames, I'm marking these things out. So for me, all these things that I have on the chart right now, the time of day at the bottom, the little indicators all that I'm using, the ERL at the top, the previous day high, all of this is basically, I'm building what that last screenshot is going to look like before I even get the chance to do it. So I want this screenshot, the screenshots that I'm taking and the kind of price action as it's printing, to look as close as it can get to when I do it after the fact, if that makes sense. So as you get the reps in over and over and over again, eventually you'll be able to do that. And you'll know, okay, what PD arrays are important, which ones aren't important. The 5 minute looks healthy enough, by the way, so I'm turning it off at this point. It's too late in the session for it to reverse. So if it drops again, I'm wrong. It shouldn't drop and take this low out anymore, nor should it really even dig into this inefficiency anymore. This IFG should be supporting price. I don't really want it to drop, so shouldn't. Shouldn't drop below IFG now. So yeah, like I said, I want these kind of screenshots, and as I'm marking it up, to be as close as I can to what it looks like at the end. Because then for me, I know that I'm doing something right. I'm using those tools and that data that I've analyzed and placing it right on the charts. And obviously, you're going to be wrong. You want to learn a new PD array, you want to learn a new technique, you want to learn something and get really good at it. The part that we don't like is as we're progressing, it's like a stair step, as Patrick but David talks about it. And when you go to the next step, you're in the bottom 20%. And that sucks because you were just at the top 80% of your previous step. So you may be just really, really good at marking out fair value gaps. And then it's like, boom, I know exactly what a fair value gap is. I know how to use it. I know what an IFEG is. As soon as you start using order blocks, you're going to be in the bottom 20% of marking out order blocks. And for some people, you're not going to need them. But for anything in life, as you're finding progression, as progression in your model, progression in your tape reading skills, your bias, there's going to be times when you do have to adapt and maybe tweak some things. And okay, this is not what I want to use anymore, so I'm going to drop it. And this is what I'm going to start to study. There's going to be a little bit of a period where you're going to struggle and you're going to be wrong more than right. And then once you pass that threshold, you're going to be right more than wrong. So being able to withstand some of that fire the first however many weeks it is or days it is to get a good grasp on the concept, that's all you need. It's just, I had it pinned on my Twitter for a while, which is the thing that separates the great from the average is the ability to sit through the fire. So if you have that ability to just learn something and obviously be wrong in applying it and then go back in after the day and find the answer key, find the answer key, find the answer key. You do that for 30 days, 60 days, 90 days, you'll have a huge understanding of price action compared to someone else who doesn't. And that's like the work I was talking about of being obsessed. If you do that, you're going to see leaps and bounds in your progression compared to someone who if you feel like you're plateauing, just go in and do that. Put this down here. So it really should not drop at all. I don't even want to see wicks below the IFG. I'm gonna screenshot this, put it into predictions chat. I already put it in there. Never mind. There you go. So that's the SMT I wanted to see. When I was talking about in the beginning of the stream, I wanted to see SMT in on the 15-minute chart, and we didn't get it. Now we've got it between here. So that would be the session low. This 10 a.m. This is a protected swing low anyways. So you can put SMT there. That's why I said it's an intermediate term low. So that's why we shouldn't also drop into the rejection block. Shouldn't take out the low. Shouldn't even drop below this. That should be the supporting PD array towards the drawn liquidity. Looks like ES is SMT with NASDAQ. What would that mean regarding a possible reversal? At the highs or the lows? Oh, at the highs? I'm not worried about that at all. That's normally what's called. So the thing about SMT, obviously, is we can't pattern trade SMT. A lot of people get into the habit of, as soon as they see SMT, they flip bias, or they place too much emphasis on SMT. The thing we have to realize about SMT, number one, is it's always going to be there on both the highs and the lows, everywhere. You need context for SMT to be relevant. And also, if we think about SMT being just visually, I want you to kind of briefly look at this, right? Which one is going to take their high first? So normally, if we're bullish, for example, just we form the SMT between here and here, this one is going to take that high first in terms of time, right? In time and distance, it's going to be closer. It's going to be probably quicker to get there. So in the beginning, there's going to be SMT there before this one kind of catches up. So this is what's called six sister, which is where one of them is displacing, taking out the high and kind of continuing the profile. This one is a little bit too slow to catch up. So it's going to want to speed quickly to get to that same point. So they're kind of in line in terms of distance from the low. Price, they want to be very symmetrical. So if this one's up 3% and this one's behind at 1%, it's going to want to catch up quickly. That's what's called six sister. So I don't look at that as SMT. I look at that as kind of NASDAQ is lagging behind a little bit, and it should continue its move, take out that high. Now, if at 1030, it takes that high and we form another SMT, or like, for example, we form SMT with this buy side liquidity, then I would consider, do we have something that's just one element, right? That's the first piece of the puzzle. Okay, that's one indication. Just like how I said over here, this is one indication of it being weak. It does not mean I'm going to be bearish going into it. It's just that's the first indication. And then now I said the closure and everything else. You got the closure there nicely forming and filling within the gap and holding that. So there's no problem with that. Same thing with SMT. Don't place overemphasis. As soon as you place overemphasis on one PD array is when you get caught up in flipping too many times or being unconfident about your bias. If you're not confident about your bias, it's because you place too much emphasis on little things. You look for everything as to why you could be wrong, instead of looking for why the things you're right and why do you trust the bias. If I just spent 15, 20 minutes finding a bias in the morning, I'm going to be pretty confident in it. I'm not going to be marrying the bias, but I'm going to be confident in my direction. So I'm still going to read order flow the way it's telling me. But if it's one thing or two things, I'm not going to be super worried about it, because obviously we expect it to be like this for our bias. What happens then if it's, like this or something was the actual session? That's pretty close. So you have to allow for variance. Like there's, in some sense, you're going to demand a triangle and it's going to give you a trapezoid. It's still got the angles you're looking for and kind of, but it's not going to be perfect. So that's why in the beginning I tell people you should not be flipping bias. It's best in the beginning if you just get a bias, you study it with that direction. If you're blatantly wrong, you turn off the charts. go back in later on, figure out why was I wrong? What can I fix later into the session? So, but then as you progress, you'll know, okay, there's times where my bias is blatantly right. There's times my bias is right, but with variance. There's times I'm blatantly wrong, and there's times I'm wrong and want to flip. 4 different scenarios. You're not going to know each of those scenarios in the very beginning. And that's why a question like that is fantastic. Looking for SMT at the highs, that's great. But if we do say that SMT was something I was looking for, I would need to see then, confirmation reversal, displacement, etc., to then say, okay, now I can flip bias. Sometimes when I'm extremely bullish, you just need to see that SMT. Other times when I'm not expecting it to be that direction, I want to see 1, 2, 3, 4, 5, and then I can say, okay, 6, 7, 8 is going to be this. Other times I just need to see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 is going to be this. So it's really just gauging it off of this same exact thing with this trade here. I already see 1, 2, 3, 4, 5. Okay, I can get in here. I don't need to see it form the low, displace away, get in here. So it's kind of just working backwards in some sense. If you know, kind of, normally the starting point, let's say, is 3. Okay, and we have 2 and then 1. Say this is the SMR. This is our entry. And sometimes we'll be able to shift this back where now SMR becomes the number 3. And then you've got something here, something here. So now you can trade the SMR. That's what I was doing today on demo for that long opportunity. So it's 10:30 right now. We're kind of hovering around this inversion fair value gap. And it's still, if I mark out the 15-minute gap, let's go and do that. We've got, there you go. So this is the 15-minute gap we've been trading into. You can see we're just around consequent encroachment of it, and we're having that high resistance. Nice thing is we did close above 50% right there. So that's already a strength indicator. But we're having to come into it, drop back down, come into it, drop back down, come into it, drop back down. It's going to be a little bit difficult. I'm actually going to move my stop in this case to the swing low. So yeah, same exact kind of criteria. It's 10:30. We're looking for this new high to be made per session rules. We're not really looking for it to drop below this inversion fair value gap. If it does, I'm not going to immediately close out or anything, but at that point, it's very weak compared to what I wanted it to be. If I wanted to go up to here, if I wanted to go up to the previous weekly high, I needed to kind of aggressively climb through this. On the 5-minute, let's see. Yeah, the 5 minutes, not the best. You can see that kind of weak order block. It's not been taken out with the high. It's just not been validated, but I'll mark this out. This should be kind of speed as well. Oops. 22 YMs catching up. So you can see here, this is kind of what Six Sister looks like. You got this kind of SMT going on, but is that SMT or is it just kind of slowing down? So this is where you look for the draw to be a kind of continued move. This is, YM is complete opposite of NASDAQ right now. So there's no symmetry whatsoever in terms of the indices. I look over here. Let's go to the 1 minute. You've got ES kind of consolidating in the beginning. You got NASDAQ moving up. You got YM moving down heavily and then coming back into the range. Not fun to be in at all. Okay, so we got tiny SMT there. These lows here and here between ES. See if it now can displace through this candle, the 1032 candle. That'd be a change in state delivery. I'm going to clean this up a little bit. That's fine. Something, baby, I can't fake it. Let me get more water. One sec. So the SMT is not. We just wait a little bit. Waiting for last ditch. Nah, I don't really want to be waiting for last ditch in this move. I wanted an early move or nothing at all. So there's your IFVG being tagged low end. And now into the reclaimed inefficiency. So it's consolidating around this lower 25 quadrant, lower half of the gray box, which is that higher time frame PD array. Which technically can be used as a target, but when we're looking at this session to be displacing past 10 a.m., it should come back up and take that swing high. So I don't think it's going to be finished with this session. I don't think it's swing to Z. I don't think it's going to consolidate for the rest of the day. This is just a very difficult high resistance move that's having to come back up into this buy side here. So we kind of have to wait for it to do that. So, like I said, I don't like the fact that it's tagging this IFPG. It shouldn't do that. I'm coming back into this reclaim now. Let's see what S is doing. ES looks a little bit healthier. Still no 1030 high. Nothing on my M either. Sorry. All right, so now you look to see if this is the retracement low. This is the SMT. If that low is taken out, I'll turn off the charts. I'll leave my limit orders there, but at this point, this should be the low. M15, there's really no displacement. Is that just the high resistance to fill the 1 hour gap? It could be. Is there a 4 hour inefficiency there too? There is. Yeah, the 4 hour, there's no displacement here, right? So you could be looking at that as a potential for. I based on seasonal tendencies, based on the higher time frame, I do think we're going for all-time highs. So I would find it then if we're a little bit weird if this week we went from premium inefficiency down to sell side, unless we're really stuck in this consolidation. There is SMT here with the new week opening gap, so PDR SMT. So I don't think it should drop in terms of a weekly perspective. We do have NFP, I guess. So if we're bullish for June, then NFP we can come down and take out that low. NFP is normally kind of the monthly Judas swing, if you will. Occasionally. So I don't I would not favor, let's put it this way. I would not favor it to be bearish this week. I want it to go up and take the previous week high. I want it to displace and attack all-time highs, given the news driver. That being said, you are right. I don't see the 1 hour, the 4 hour, or the 15-minute really displacing the way it should up towards this inefficiency. So that's going to be a slight problem, but I'm not too worried about it. I'm gonna screenshot this a little bit. There's your SysD. I'm gonna trim this down to the 1008 low. So it should now, like I said, if that low is taken out, we don't want to see it anymore. But inefficiency being tagged into this discount gap displaces away. We should now to see an inefficiency form up here. I want to see if your value get print on this right side. And I wanted to close above this IFEG too. That's the first thing, I guess. First thing is close above the SysD, close above the IFEG. Boom. Okay. So now, can sit up a little bit. Now we can start to see things work in action. So we got a bullish order block there with a gap. I want to see it, like I said, I want to see it speed away and probably form an inefficiency in line with this breaker. Tiny gap there. SysD. This is kind of your re-entry opportunity, if you will, on the retrace of the SysD. You want this to be left open as a breakaway gap, preferably. Breakaway, boom. So if I can wick this line, the blue line I have there, wick it, then tag, displace up, form an inefficiency on the breaker. I don't even want to trade into the breaker if it can just close through it and just keep going. I don't even want to see a re-entry, so kind of something like this. Take out that maybe previous week high, maybe come back into the range and then look for that. Previous week high, what did I say? Previous, the current high. So that was an indication of weakness, right? Taking out that inefficiency low. Does it close below it? No, it forms the SMT there. So that's legal, kind of in the sense of kind of the closure there. It's doing what it did over here, like I was saying, of this, the first indication of weakness. First indication of weakness, or AN indication of weakness. SMT forming there, then it takes out, forms SSD, so that should be protected now. Another intermediate term low, boom, right there. It's a real intermediate term lows. Now let's see if we can get that displacement through the breaker. One of the skills that at least I've maybe subconsciously developed, or I think subconsciously I've just developed it, is the ability to turn the brain off in a sense while I'm tape reading. So you probably kind of saw me here between like maybe here to like here. My brain kind of just enters into power save mode. I'm just kind of watching it. I'm not paying too much attention to it. And then as soon as it starts to see me these things, see the things that I want, I'm marking out PD arrays. I'm now committing mental capital to it. That's a skill that I think as you watch it more and more, it becomes self-evident that you can do it. I don't think it's something you can train as much. If you try and consciously train taking your attention away from the charts, it actually sometimes is like don't think about a pink elephant sort of thing, or then you think about it even more. So I think if you just watch it over and over again, the price action you don't like, that's not wrong. You just learn to tune out of. And I'm not losing my focus. I'm not pulling up YouTube. I'm not looking at my phone. I'm not doing anything like that. I'm just simply not committing mental capital to the price action. So I'm not marking a PD raise. I'm not expecting precision. I've got parameters at the consolidation low to consolidation high, but I'm turning my brain off. Now in here, SysD is being wicked. Now we want to see displacement up through the breaker. Something, baby, I can fake it. Mm-hmm. Bro, I'm not in a 5R trade. You take anything today? Set out. When it takes out this high, I'll be done. Tape reading for today. Unless we smash through it, then I'll look for the buy side. But yeah, actually, I got enough mental capital for that. You take anything today or no? Oh, real. Okay, bet. Oh, is that the screenshot? Oh, I see it. Hey, W model, eh? Bro, stop. So here's the displacement we're looking for through the breaker range. I want to see, like I said, I want to see the gap form. And if it doesn't fill it on a 15-second chart, I just want to see a wick back in, and then let's see it. So let's see it close through. And then this needs to close, because this needs to come back up. Come back up and print up and close up here. Doesn't do it. You need to close healthy. Healthy. Meh. This is the retrace into the breaker I was talking about. There we go. Okay. Now it should close healthy on this next 1 minute candle. Not this one, but the next one too. There's a tiny inefficiency on the low end. I want to see this left open as breakaway gap too. So we're not getting the gap right on it, but it's coming back in. It's not even filling. This now should close. I want it to come out and take this high. Whoops. Go over and take this high. Both these highs. Your boy. Thank you. There's one. Where's the second one? Here. I used to have a Maltese Havanese mix. Now I don't. I'm gonna get a new one. I don't know what. I'm thinking a Belgian Malinois or like an Australian Shepherd. One of the two. Or yeah, one of the two. I think they're both sweet dogs. I did not, bro. Don't say that. I'm gonna get swatted. So at this point, I want to see if it just can get healthy candle, healthy candle, healthy candle, and take out the high. I don't really want it to come back into, so like I said, this should preferably be left open as a breakaway gap. Another one. I gotta pull a whole bunch of stuff in here, so I'm not gonna mark that out. Keep this off too. Yeah, Australian Shepherd's is sweet. There's a YouTuber named YBS Youngbloods, I think. I think that's the YouTube channel. He lives in Australia. He does a bunch of like outdoor boating things. It's like if you haven't seen a video, it's just insane. Like the world, I guess, that some of us have not seen. So there's your, it's staying within this wick. This is a very strong algorithmic signature here. If it's staying within this wick, so you're going to see it pop up, take the swing high, probably close above it. And then going into last ditch macro, hopefully we have a retrace entry going into the buy side. Okay, at this point now it may take out the low, but it's staying within the wick here and closing back. So I like that so far. Let me see if I can find it. As we're watching this, let me see if I can pull up. I said I wouldn't lose my focus, but I don't want to forget about this before I turn off the stream. This YouTube channel is just, it's like one of those YouTube channels you can use to eat food, if you know what I'm talking about. I know the Outdoor Boys just retired. So this channel here, it's just absolutely insane to see some of the things that is around the world, you know? So I like watching these videos. But YBS Youngblood's fantastic YouTube channel. He's got this sweet Australian Shepherd. And ever since I kind of watched his videos, I was like, this is a cool dog, man. Very intelligent dog. Looks cool. Soft, fluffy, you know. Yeah, the Outdoor Boys, man. When I saw that retiring thing on Twitter, I opened up Twitter like randomly on one day. And that was like all of my feed was just Outdoor Boys. So I was like, bro, there goes my YouTube channel eating. My eating channel, unfortunately. He retired because he got too famous. Yeah, he does know ball. I respect him, that man. All right, at this point, it's just playing with us. It's supposed to form this new high, you know, normally, as I said. 9:30 to 10, 10:30 to 11. Oh, yeah, now I zoom out. Now you want to do it? Huh? Right. Yeah, that's what I thought. Here's your new high. I know. So I'll be wrapping up the stream here. I actually will be. So you'll see the end, the end stream effect kick in, and I'm still looking for 21,679. As I said in the daily bias, that's my preferred draw on liquidity for the day. I've got 2 limit orders up there. I got 1 limit order. Never mind, 1 limit order up there. So I want to get that one filled, and then eventually the previous day high, or the previous week high rather, is my all-time buy side target for this 1 shot 1 kill entry. Me whenever I'm stuck on a loading screen in a game and I act like I don't care, so it speeds up. Yeah, you know ball. I used to do that for the Cartoon Network games. There was a Tom and Jerry Cartoon Network game when I was growing up. And I would go to my grandma's house, and she had a computer there, and it would take 3 years to load because they had like 2 kilobits per year Wi-Fi speed. So I would just like turn my chair all the way around and then like peek over my shoulder and see, oh, is it loading? It's like the market for real. Anyways, you've got your pretty, I think, like I said, it wasn't going to be swing to Z. I was not expecting swing to Z today. A little bit high resistance as we're trading through the gap. That's fine. Targeting the buy side, I mean, based on how the candles are printing here, based on for projections lining up there and here, which technically you actually can use the opening. In this case, since there's SMT between here, I would favor using opening range instead. So -1 up here. There you go. Now you got 3 targets, okay? 3 targets for the rest of the day. I'll put that in predictions chat. Screenshot before I head out and set alarms. So I'll set an alarm up here. Set an alarm up here. Set an alarm up here. And overall, not a bad session, right? I think entries were a little bit difficult today. You had kind of more early entry here. And this one, the macro time. If you got too aggressive with the stop trimming, then you're gonna get stopped out there. But in this case, now a stop trim to here would be perfectly fine. Or you have now this completed market maker buy model, shouldn't take that out. Even in here, this stop low should be safe. Intermediate low, intermediate term low. So stop trimming to the intermediate term lows itself, from the low of the session to here. A very, very good stop trimming technique. As you see it, tag the premium end of the gap here. It can start a slight retrace into the short-term discount of the dealing range, which may be here or here. But you'd favor it now seeking this 21,679. So there's your tape reading for today. I may just leave it on for the recording so we can see that buy side tagged. Tomorrow we may have a quick stream. I'll have to see. Is today the 3rd? Yeah. So I'll be on vacation from the 4th until the 12th. Like I said, for the past couple of days. I'll have my laptop. I'll have my mic, like a Rode mic. So I'll try and still do streams if I got the time for it. One-on-one calls, same exact thing. I'll still probably have availability, but it'll be day to day for those who have one-on-one calls with me. I'll just have to let you guys know. You let me know as well what times work for you, and we kind of work around the clock. But no stream Thursday. Friday will be iffy as it's NFP. Tomorrow, like I said, maybe 30 minutes, if anything, if I have time. If not, I'll let you guys know regardless into the trading hall chat as I usually do in the morning. All right, so conclusion for today, pretty good price action, multiple entry points. Not bad with the 10 a.m. news. And pretty solid, I think. So as we look for this 21,679, I think it's a good way to study bias for today. Very, very clean bias, I think. Obviously, given the fact we got a nice classical and protraction profile. Yeah. Right. So yeah, I'll leave the recording on for kind of the end part of it as we're wrapping up here. So I'll put my alarm. When the alarm goes off, I'll stop the recording. But I'll end the stream off here. So if you got any questions that I missed, send me a DM. I've got a couple of DMs I got to respond to. And hopefully it was insightful. I think hopefully you were able to learn something from today and about order flow, about reading it, the 1-minute chart, the 5-minute chart. I don't think it was too difficult today, but there's still obviously a ton of stuff to learn from an example like this. All right. So take care today. Journal. Do the things that are necessary to succeed. And I'll talk to you guys soon. Peace. All right, like I said, I'm going to leave this recording on to the buy side. Something, baby, I can fake it. Who? Kind of. Uh, well, here. Oh my gosh. Oh, we're finally going for the buy side here. Let's see. Sorry, I was I was talking to people in general chat. Probably hear me laughing in this recording. It's something, baby. I can feel it. Oh, oh. There's ordered filled. Yeah, it's gone. All right, so that wraps up the recording for today. Currently got filled out there, so we're looking for the higher prices up to the previous week high. Take care today.